everyone, and welcome to our Data Intelligence in 2022 and Beyond event in partnership with Oracle for Startups and Chargebee. We're excited to hear from our speakers and panelists, and we're thrilled to be bringing you some of the most exciting big data startups in the game today. I'm Tara Lukabaugh, Director of Strategic Initiatives at OneValley, and I'll be your host for today. None of this would be possible without our event sponsors, so on behalf of the whole OneValley team, I'd like to thank them for making this event a reality. We'll be hearing some more from them later on. Before we kick it off, I want to tell you a little bit about what we do here at OneValley. OneValley is a global entrepreneurship platform that supports entrepreneurs, accelerates startups, and empowers organizations across the globe that foster innovation communities. Over the past 6 years, OneValley has supported hundreds of startups that have raised over $1 billion. Our mission at OneValley is simple: democratize the resources of Silicon Valley and share them with the global community. We do so through a variety of initiatives, including events like these. Pre-COVID, we were running around 80 events a year in person in our various innovation spaces. Today, not only are we running these events virtually, but the online accessibility of them has opened up these opportunities to the world at large, the effects of which you will see today. Now I'd like to introduce you to Passport, our online innovation platform. As you can see, Passport is our online innovation platform with over 40,000 members who access and interact with not only one another, but also dozens of corporate partners, hundreds of investors and mentors, and nearly $1 million in discounted or free technology tools and services. Special for our viewers today, we're offering 25% off of a premium Passport membership using the code on your screen. If you're not a member yet, I encourage you to check us out and take advantage of this discount by clicking the banner at the bottom of your screen. As we mentioned, this event has been supported by our awesome partners, offering their resources to make this event successful. We can't thank you enough for helping us cultivate this community and supporting us in showcasing some of the fantastic big data entrepreneurs that exist in our ecosystem. To learn about Chargebee and Oracle for Startups, we've provided details at the bottom of the screen. Now I'd like to kick off our fireside chat. So please join me in welcoming Jason Williamson, Global Head at Oracle for Startups, who will be sharing his experience as a founder, public servant, and his position now sitting at the helm of Oracle for Startups. Thanks for joining me, Jason.
Hey, Tara, how are you? Thanks for having me.
I'm great. I'm doing great, thanks. Before we dive into the conversation, I'd love to give you the chance to just share a little bit about your background and the work that you do.
Yeah, sure. It's really fun to be here. Love doing these things, and it was actually great to hear some of the stuff you talked about before on some of the serendipitous things that COVID's given us, which is being able to reach more people easier like this. And so thanks for everybody putting this in at OneValley. So it's a real treat for Oracle to be a part of this. So I guess just a super quick background on me. It's probably not that interesting, but I'm like a lot of the people here at this group. I'm a founder and kind of like to live life on the edge, just like everybody else here. And that journey has brought me to getting a chance to lead this effort at Oracle. So I've been a founder of a couple companies, some boutique consulting. I've had a foot in academia. I still do some work now at the university level. I'm prior military, and also have worked at the corporate side at places like AWS, Capital One, and GE. So it's a bit eclectic, but putting all these things together, it's kind of like all of us in this entrepreneur space. We take some of these experiences and see problems and then like go build stuff to fix it. And so I'm no different than that. So that's a little bit about my background, and we'll probably tease some of this out in our conversation, but with the program that I'm looking after right now for Oracle is we are really out here trying to come alongside startups that are trying to accelerate their growth through technology, through mentorship, through access to customers, which is super important, and something that we're really excited to be able to do, and really open up markets or help people think about how to open up markets, outside of their particular region, but really all around the world. So we're trying to help people build things that haven't been built before. And it's a real pleasure for us to do that. So super quick about me and a little bit about what we're doing today. So yeah.
Yeah, awesome. Thanks for sharing. And thanks for kind of digging into a little bit of that entrepreneurial spirit. I think, to your point, everyone here can relate, and our audience can relate. And so we're all kind of in the same boat.
Exactly.
And thanks as well. Thank you as well for your service to our country.
My pleasure.
All right. So I want to dig in a little bit to Oracle for Startups specifically.
Sure.
I want to talk about the cloud platform and the startup focused program, and what kind of differentiates Oracle Cloud as being a valuable resource for early stage companies.
Yeah, that's a lot of things right there. So a little bit about the program. The good news is I can just pick what I want to talk about. The program itself really is, it's an opportunity to put kind of an enterprise class cloud in the hands of a founder. I think when people are creating and building, there is kind of a default, platform that folks go to, and there's this idea that like I need to put my stuff up and I need to make it run, and it needs to I don't have to worry about it, and like that's good. And I think really as the industry's matured, that's become a commodity, and so at some level the platform that you pick is good for running things, but then you need to think about like what next. And so from an Oracle perspective, we believe that the value of the cloud is pretty apparent. Like you don't have to convince people like, hey, you should start your startup in the cloud anymore. Here's some credits and go run. Like that's just kind of table stakes now. I think now the idea is, what is your cloud provider going to do for you to help you along the way? Yes, that's going to be continuing to advance the capabilities of the cloud, continuing to create developer tools, continue to make it easier. I think we're doing that. I think we were behind, but we really have turned the corner in the past couple of years in that. Once you've kind of answered those questions, and it's all kind of like compute, storage, and some cool stuff on top of that, the question is, if I'm a founder, what cloud provider is going to answer my phone when I call, answer the phone when I call, give me some advice when I need it, and not just talk to a bot where I have to spend $2 million a month before I get someone assigned to me. And so that's something that I think that's the secret sauce of what we're trying to do. So we've got this idea of this shared responsibility that says, hey, we're going to give you an enterprise class cloud that works and is up and it is in more regions than anyone else in the world, and continue growing. And then if you follow that path, we're going to work with you to kind of unlock the opportunities for amplification, for marketing, for access to revenue. So that's hopefully that kind of answered some of that. And if you want to press down on some of those things, happy to do that. But that's what we're out to do, and why we think we're different than everyone. I like to use the term uniquely different and better. And so that's why I feel like we are. Yeah.
Yeah, that's great. Thanks for sharing. I think it's always a conversation with companies, at least in our ecosystem, and I'm sure in others, of kind of when's the appropriate time to start looking at cloud infrastructure, and once I am looking at cloud infrastructure, how do I build that ecosystem? And so what advice would you give founders of like when to start having those conversations?
Yeah, I think that's a good question, because especially if you're building a solution that does have a like enterprise application, so not a B2C play, but like I have something that solves some sort of business problem, then there's always an idea that like, boy, if I could partner with fill in the blank of big company, that's going to really accelerate me and help me go. And so thinking about like when is the right time to do that is an interesting question, because if you're too small, you probably won't get very far, or you will get lost in their like ISV program, their independent software vendor program, or you're just not going to catch any interest, or, if you're too young, Lord help you if you get a deal, because you might not be able to support it. Like all of a sudden, like skadoosh, you've got a $2 million opportunity. You might not be ready for that. So thinking about like what kind of partner that you want, in a big company is going to be really important. So like the way we think about that too is like, hey, we're Oracle, we're not small. It's not trivial to, think about us, but what we want to do is kind of help people along the way. Like when you're small, you're thinking about that, let's do these things first, and then these things. And then when you're ready, let's go walk in the door of this Fortune 500, alongside you. So, we spend a lot of time trying to think about how to appropriately engage with small companies, and so that they don't A, get overwhelmed, or B, bring them, just to the game when they're not ready, but then also give them value. So it's not just, a waste of time working with somebody really big. So I think that when you start really depends on kind of what stage you're in and what are your objectives that you're trying to accomplish. Is it trying to get revenue? Is it trying to get noticed? Is it trying to get, acquired? It's all going to depend on, what that objective is for you as a startup.
Yeah, makes sense. As with everything, everything is so situational. It's difficult to, give sort of blanket advice, but
right. It depends.
Yeah.
Exactly.
I want to switch gears a little bit into the multi-cloud, which you've written about a lot in the past. And
sure.
Could you just define multi-cloud for us? Tell us a little bit about it for our audience that hasn't heard of it.
Yeah, I mean, so multi-cloud is this notion. Nowadays, I think when we embrace technology, especially in cloud computing, we've tended, for various reasons, which we won't talk about here, we tend to go like all in on one company. It's ironic, by the way, because when we first started talking about the cloud in the middle 2000s, there's this idea of like, you got to get out of vendor lock, you got to get off if I'm on premise, you're locked into this vendor. Let's come to the cloud so you have an alternative path for providing services to your customer. And then all of a sudden, holy cow, we're locked into this one big giant company that does everything. So if somebody like fumbles over the DNS server in Washington, everything's down, so, and we're seeing that in increasing form. So I would argue that people who have been all in on one particular public cloud are falling back into that vendor lock kind of world, especially the farther up the stack you go with services within that particular cloud provider. So at the most basic layer, you have compute, you've got storage, you've got networking. When I'm doing things in a ubiquitous way there, using like containers and things like that, then I have ways to shift between one cloud and another to ensure availability, ensure not vendor lock-in. When I start moving up the food chain and what those services that the vendor has, and I want you to move all the way up the food chain in Oracle, but like the farther you go up in some of these others that aren't standards based and get to be very proprietary, it's super hard to get off. Like, without calling a lot of names out there, there's, very large scale databases that are out there that aren't based on open standards, are very hard to get moved off. And then once you're in, your bill gets like out of control, and like, what are you going to do? It's like going to cost more to get off, or you're in a position where you've got accessibility, or an entire part of the country goes down, or in a worst case, maybe some routing issues happen. So this notion of multi-cloud, this is a big deal. And I think it may even be counterintuitive for somebody from Oracle talking about that. But like, we want you to like build your applications that are like hyper portable, and we'll earn your business, we'll earn it, but like, it's okay to make sure that you play well nicely with others. In fact, we at Oracle have partnerships with Azure so that you can run on a Microsoft cloud and have direct data connection between Azure and OCI, which is Oracle Cloud Instance. So I'm not just like writing about it, we're actually doing it. And I think it's good. It's just, it's good to think about not putting everything in one place unless you absolutely have to. It's about risk, I think, and it's a way to kind of to mitigate your risks going forward.
Yeah, absolutely. We've even seen just from some of our B2B companies in our ecosystem, just as an example, being built on Google Cloud, and then a client wants them to be on AWS, and they're still at the early enough stage where they can switch, but do they want to switch? Or, so for a company in that position, what would you tell them of like, should you switch? Can you switch?
That's good. I feel like that's a trick question. No, I would go earlier than that. I would say really think about designing your system so that you aren't super dependent on that cloud provider. So if you're out really, really early, be super careful about taking advantage of some of the services that are provided, like some of the serverless stuff or some of the really cool NoSQL stuff, but like it only works there, or it's really hard to move it. So you could still be like, hey, I'm all in on GCP, I'm all in on Google, but like, man, this customer's really great. I'm in there at AWS, or like they're a big Oracle shop. I need to be able to run this on Oracle. You should have built it in a way that it's going to make it relatively painless to move. I realize that not everybody has a chance to do that. That's why we actually I have a whole team of engineers whose only job it is to help you do migrations for those exact situations. Because we also appreciate the reality that, I'm rolling out of college and I don't like, my first reaction to put my code on the cloud isn't always us yet. We're working on that, and we're working on going and working earlier and in the classroom and things like that, but we're not there yet. So we realize that we got to help people migrate. So that's a service that we provide at no cost, by the way. It's just like hands on keyboard to get your code from one place to another. So I think to more clearly answer your question, because I didn't really do it, I was like, they shouldn't have been in that position in the first place, is it might be painful to make that move, but it's probably worth it. I was just preparing some stuff I teach a data science class at UVA, and I was preparing some stuff on Mongo, and it's like, hey, if you want to deploy to here, to here, to here, to here, right? So like, that's a best practice for a major provider of a NoSQL database, is to be multi-cloud, So I see a lot of companies kind of get stuck in that situation where like, I'm only AWS and I'm using Redshift and I'm doing this. And I'm like, well, what happens when this customer needs this, or the costs are out of control? It's just like, what are you going to do? So anyway, it's a future-proof kind of thing.
Yeah. I mean, to your point, it's such a huge decision to be making so early on in the life of your company.
Correct. It's like punt that as long as you can. Sorry, Just to say, punt that. It's the same thing as like taking equity. Punt it as long as you can. Take VC, punt that as long as you can. Anyway, that's another conversation. But
write that down, everyone. Write that down. Punt that as long.
Sorry for all the investors that are here.
Okay, so switching gears, I kind of want to go out to a little bit more of a macro conversation. And so obviously you've been involved in the ebbs and flows of the big data market through the pandemic. So what are some trends you've seen building?
Ooh, as a result of big data, I think it's, we've been talking about big data for a little while now, with the whole like 3 and now 4 V's of velocity and veracity and all that kind of stuff. And so, for a few years we knew big data was a thing, we didn't know what to do with it. And now, between systems and software and hardware and streaming, we're able to like capture it and start to ask interesting questions. Because that was before we just didn't know what questions to ask. I have all this knowledge. What's my question? I don't know. I think some of the things that I'm seeing right now is because of the advancements of the cloud and the ubiquity of data and the accessibility of it. And I would kind of throw in there the advancements in GPU processing and HPC, high performance computing. We're seeing more people and a broader base being able to tackle questions and solutions in this space. So before, we had like only people that had really big gear could do it, right? Like really expensive gear that you put there to capture. Then like, oh, it became a little easier and we didn't have a lot of data scientists. Now we're seeing that skill set broaden. We still have a huge gap. So like, if you're out there, like, what should I learn? You know, go dig into data science stuff because it's so needed. And then infuse that with like the application of some deep learning and AI. You know, maybe this is a very obvious answer, but I feel like that's where the trend is obvious to everyone. What I think isn't is the rate of acceleration. So I think it took us so many years to go this far. Now we're in just this amount of time, we're going to go like that far. So I think we're going to see that the pace of change is going to accelerate rapidly because there are more and better data science tools out there, and more people eager to learn, and faster ways to learn it. And the systems that access it are easier to get to and cheaper. And so like we're constantly making investments in HPC and GPUs. And so a bunch of our startups are in that space. So that's my prediction.
Great. Thanks for sharing. I got a question from the chat. What most important lessons did you learn from your entrepreneurial journey?
Yeah. Besides punt as long as you can to take your venture capital.
Exactly.
I'm a very big fan of eat what you kill. And so, if you can build it and sell stuff, do it. Now, there's always this question of like, do I worry about growth or do I worry about profit? And there's very valid schools of thought on each side. And depending on how you take capital, is on what side of the camp you're on. So again, like we were saying before, it all depends. I'm just a fan of having a simple cap table as early as possible so that you have more flexibility later and more power later. And, it's just a lot easier the less money you have in the beginning. I realize that's not a luxury for everyone, but there's this like myth that like, I'm a startup, I'm going to incubator, and then I'm going to go work really hard to get that VC money. It's like, it's there, and there's a right time for it, and it's when you need to like accelerate these certain things, but don't chase it right away. But I think the biggest lesson I learned was kind of like to use a sports. I'm a huge sports fan, and we're in the middle of basketball, March Madness right now, and so I like to say kind of like let the play develop. I was so eager to like, if I don't do this right now, the window's going to close. If I don't launch this right now, somebody else is gonna. If I don't know, and I'm like, you know what? If your idea is really good, there's room for competition. There's room for maturity. There's room for you to like get it right. Now you gotta hurry up slowly, if that makes sense. Like you still need to be fast, but don't be silly. But like in basketball, I'm coming down the court, and if I drive straight to the basket and I don't have a clear lane, I'm going to get the ball blocked. I need to let the play develop. I need to let the big man move up, set his screen so he makes an opening for me, and then go. If I have the best skills and the best shot and I go before it's ready, I'm going to hit a big giant wall of a 7-foot guy, and I'm going to get thrown on the floor. It's the same in this space. If you go too early, you could fail. So just like learn to have patience in a high speed game. And so I think for me, that was like the biggest lesson. Those were two of my, I want to say mistakes, but like hard learned, kinds of things. So, yeah.
Yeah. I love that direct quote, having patience in a high speed game. I think it's just a perfect kind of bucket of what you're saying. And as entrepreneurs, we tend to be so reactionary that it's just great advice.
Yeah. Exactly.
So
here's the last one. Embrace the struggle. Like pain is good. I'm not just saying that because I was like in the military. Like struggle is what shapes you. Struggle is where you learn. Adversity, good times make weak people. People have said, right? And so like, there's no happy path for a founder. Doesn't exist. It's going to be hard, and there's going to be pain, and you're going to learn the most from that. So like, be good with pain. So, yeah.
All right, I want to ask one more question before we wrap up about your experience in the Air Force and now as an educator at various universities. I'm hoping you can talk a little bit about what those experiences have done to help you in your entrepreneurial career and how they've benefited
sure.
you. Yeah.
Sure. First, I'll correct you. I was a U.S. Marine, not in the Air Force, but that's okay.
My apologies. I'm sorry.
that's almost offensive, but that's okay. So yeah, I was a Marine Corps, and I think you definitely, and I make this point because it's very unique about our culture in the Marines, is you pride yourself on doing more with less. It's like, we don't have enough stuff and we're outnumbered, and like, that's exactly how we like it, because that is what teaches you to kind of strive and struggle and kind of run towards the danger, run towards and then find the solution. So I think I drew a lot on that coming through that experience. And then, like, from the university side, I just, from an entrepreneur perspective, first of all, I love doing it because, like, for me, the whole point of all of this, and this would be more time to talk, maybe in another session, was, I felt a calling to this whole field, as a young person, because I felt a need to, like, influence influencers, because I saw that, like, the world's a better place if influential people are doing cool things. So, like, let me help that. And so I see education and entrenching myself within a student population as a way to influence future influencers. And so we all know that, like, out of the university comes ideas, and there's energy, and there's just, like, eternal hope. And I think being able to, like, harness that, and especially having a chance to kind of help people understand that, like, the risk for a kid coming out of college start a company is, like, super low. Like, I just had this conversation the other day with somebody. They're like, I'm not sure if I want to start a company or go here. I'm like, why? It's like, it's too risky. I'm like, what's your exposure right now? Is your 3 kids? He's like, no. He was like 19. I knew his answer. Yeah. And so, like, your risk level is actually quite low when you're 22. Like, that's when you go do stuff. And so I think kind of combining this journey through the military, where you also with young people, and risk is different. You think about risk differently there, but it helped me kind of assess risk in a whole different way. And so, like, I'm thinking about, like, I'll have to worry about is where I'm going to live versus, like, danger. So, like, go start something. That's awesome. So anyway, not sure if that's exactly the answer that you wanted, but I think the moral really is that the environments that you are in really shape you. So for me, it was the military and startups and being in university and, like, kind of knowing what I want to do for a young age. And so, like, I let those things shape me from a higher kind of calling and purpose. And so that's what I always encourage startups to do. It's like, some people are really chasing the dollars, and you're like, be super careful of that. Like, you need to answer a higher question, which is, like, what you want to be. And then the how usually comes. So focus on the be verbs, and then the action verbs tend to follow well after that, instead of the other way around. So I know you got me off on a tangent with that question.
No, it's much appreciated. We work with a lot of universities, so I'm sure there's a lot of students listening, and I hope they're taking notes.
Hope so. Good.
Yeah. Well, thank you so much. Really enjoyed this conversation, and really appreciate you taking the time to be with us today.
Oh, so happy to do it. It's great to see everybody, and I hope we can connect soon. And I don't know if you'll put my contact or LinkedIn on there, but I'm always open to, connect. And if you want to check us out, oracle.com/startup, get you 1-2 clicks and you're in. So there you go.
Great. Thanks so much, Jason.
All right. Right on. Thanks, Tara.
Awesome. And now moving forward with our event, next on the agenda today is our panel on customer acquisition and go-to-market strategies for startups. I'm happy to welcome my colleague, Ash Tutica, our innovation manager here at OneValley. He'll be moderating our panel today. So without further ado, Ash, why don't you take it away?
Thanks, Tara. It's my pleasure to introduce Germain Brion and Thomas Uribe, today's panelists. So Germain is currently the SVP of Corporate Strategy at Chargebee, where he leads strategic growth projects, including merger and acquisitions and new product initiatives. Prior to leading strategy, Germain scaled Chargebee's sales organization from 3 to 150 people in just 5 years. Tomas Uribe is an entrepreneur, developer, and CEO of Mavity, a marketplace for creative teams. Mavity's actually received investment from Techstars, Pharrell Williams' Black Ambition Fund, among several other investors. So I'd love to start off with Germain. You have such an impressive background as a serial entrepreneur and an operator, and I'm curious, what initially inspired you to join Chargebee to transform, the revenue operations industry?
Yeah, thanks, Ash, and thanks for having us here. Actually, the way that I got into Chargebee is my previous startup just before Chargebee failed, right? So to Jason's point, like take the risk. Not much will happen. You survive when it doesn't work out, and it failed. And I went to San Francisco to see what I wanted to do next. And I met the co-founder of Chargebee in an Uber, and so we hit it off that way. And that's how I discovered the world of subscription billing, revenue operations. So it was quite by chance. But I think the more compelling question to me when people ask me why I joined Chargebee is really sort of why I've stayed over the past 6 years. And it's just, you see how much the market has changed and how exciting it is to power the growth of all these different businesses through managing their revenue operations and subscription billing. I think that's kind of the drive and the opportunity that I see in the market that continues to be there.
That's great to hear how serendipitous that was, meeting your future co-founder in an Uber.
Sorry, no, he was the co-founder of Chargebee. I wasn't one of the co-founders. They'd been building Chargebee for 5 years. It wasn't clear. He's one of the co-founders. I'm not a co-founder. I'm just an early employee.
Yeah, just crazy just meeting him in an Uber.
Yeah.
So I'd love to pass it over to you, Tomas. You've had such a fascinating journey coming from being a music professor to digital strategist, and then working at the New School and the United Nations. And I'm also curious what motivated you to taking the leap into entrepreneurship and starting your own company.
Definitely. Ash and Germain, it's a pleasure to be here as well, and everyone on board. So yeah, I'm a musician by trade. I'm a composer, and I think working as a composer in the film industry, advertising industry, I have the pleasure to work with different creative individuals. And when I moved to New York about 9 years ago already, of course, New York is a very big cultural capital of the world where you can mix creativity, technology, and multiple people at the same time. And I think my journey to become an entrepreneur has been kind of like that common denominator in music. Since being a musician and a composer, you naturally want to mix all the different skill sets, knowledge that you have in order to create something, whether that's a song, whether it's a music, film score for an entire short film. So the idea of building that and using that, let's say, creativity to build something new with technology, that was always kind of like my passion. And thankfully, New York and kind of like the ecosystem that I got myself into helped really push that forward.
Thanks, Tomas. I'm also a musician, so definitely see that parallel there. So Germain, RevOps, revenue intelligence, sales engagement, they've been flourishing over the past several years as new categories. What do you think is going to be the next key trend in the sales technology space, specifically in regards to leveraging big data and customer data?
Right. Really, what I saw when I was heading the sales organization at Chargebee and what we see in our customer base is a sort of multiplication of specialized point solutions, right? And so there's tons of data, to your point, but not a lot of it speaks to each other, and not a lot of it is structured in a way that you can act on it. So my assumption, sort of the next levers in this area, the next lifts, would be in some kind of consolidation, right? Some kind of normalization of these solutions, where because the tech stack has gotten so big that it's very hard to manage at least in a global organization. That we need a solution that will kind of unify this and actually let us act on the data, because we still end up, even though there's a lot of data out there, we end up through spreadsheets compiling it to be able to draw analysis from it.
Absolutely, definitely see that with Lattice Engines and 6 Sense and some of the big players in the space. So question for both of you, how can companies leverage big data and RevOps in general to propel revenue growth, both from the perspective as a founder, Tomas, but also Germain leading a global sales organization?
Yeah, I think I just wanted to add to what Germain was saying about usually that there's multiple different ways where we can obtain data, but I think more and more we see more tools where they integrate different data points. So now you're seeing a lot of products where you can add different data layers to your existing product and get multiple insights, right? And I think to your question, Ash, like on our end, usually creativity and, for example, AI or machine learning or whatever you want to call it, it has been either like increasingly or often mistakenly been associated to like human creativity or artistic practice, because we tend to relate that, for example, that AI has abilities to see or to hear, to move, to speak. So it's been applied in domains that include, audio, image, and video analysis. On our end, even though that's something that has been happening for already several decades, or a couple of decades at least, the first iteration of that was auto-tune. And I'm sure that you've heard multiple musicians like hear that robotic voice because it automatically like fixes, vocal intonations. So for the content creation as a whole, AI and big data has been incredible, right? Because it optimizes the level at which content creation can be, scaled. For our purposes right now, as we build creative teams kind of like on demand, how can we like assess different data points to make sure that a makeup of a team is as good as it can get for a particular client or their project? And there's multiple data points that go into that, right? And I think it's also, generally fascinating to find out different unstructured data points and make them structured in order to find out like what other insights can we deliver.
Yeah, I think that's a great point on the insights and how you structure your data. And just to kind of build on that, I think that if you have a big enough data set, you need, but big data and the RevOps platform and RevOps platforms today allow us to look for edge cases, right? And so when you're looking to grow your revenue, you start to look for, at a certain level of scale, optimization in kind of the 1% improvements. And if you get your data structure correctly and have the right tools, you're able to find those trends in the 1% improvements that end up getting refined, turning your sort of what you start out with a Toyota Corolla and turning it into a Lamborghini over time in terms of a revenue engine.
There's some great points there. I mean, the unstructured data and making it actionable and making those incremental improvements so important. So Germain, for all the founders listening in, I'm curious if you have any lessons for them in terms of scaling a company in a sales organization from Series A, B, and beyond. What's a challenge that you faced and some lessons you'd have for these founders?
Right, I think that's it. So Ash, I joined Chargebee. It was still very much founder-led sales, right? So I think that one of the challenges for any founder organization is navigating that turn, where your first salespeople will never be as good as you are at selling the product, right? You've been living and breathing, this is your baby. There's no way that somebody can come in and do it as well. The plus side of it, and this is one of the challenges that we navigated early on at Chargebee, is that the people who start to take over sales don't have the same emotional relationship to the product that you do. And therefore, when it comes to negotiating on price and defending the value to try to optimize for revenue, average deal size, et cetera, they're perhaps less willing to concede than a founder who is so in love with their product that they just want to see it in other people's hands, right? And so I think one of the challenges is navigating that turn. When you do that as well, it's when I do a little bit of advising, it's always the question of who is the first sales hire, right? After the founder, who do you start with? And I think this is where it's important to pick somebody who's a bit of a Swiss Army knife. This sort of Salesforce director of sales, et cetera, coming into a Series A business is not going to have they're a high performance athlete that needs the right equipment in the gym to be able to perform, right? The kind of a little bit scrappier salesperson who will be able to throw together a deck, who won't have all the tools that they need, will be able to bridge that gap. And I think that's kind of the hardest profile to find in a sales journey, going from your Series A to kind of scale B and C.
I just want to add to that, Germain. You mentioned something that's super important, and me as a founder, and of course, we're definitely still very small team, so we're pretty much doing everything, wearing multiple hats, and figuring out how to use those data points in as effectively as possible. And I think something that we're working internally is, we as founder-led, startup trying to do the sales, but at the same time trying to figure out different types of playbooks. But beyond having a playbook that we can hand off to the next salesperson is understanding how we're leveraging those data points in a playbook in order to make sure that we get to the best process possible, as effective as possible, as resourceful as possible. Because I think those key elements are very important, especially when you're beginning to ramp up your sales process, whether that's long B2B SaaS products or enterprise products, or small transactions on a marketplace, right? It all adds up, and that journey is super important to really hone into.
Tomas, you bring an interesting point, and you're have a B2C business and a marketplace business, and you've built such a large community, over 11,000 creatives, right? Shifting gears, what are some tactics you would share with founders for building ecosystems and using big data to fuel those ecosystems?
Definitely. So I think I mentioned one of the aspects of big data. It's more of a long-term goal that we have in terms of analyzing and using, because right now AI applied, or machine learning applied to creative industries, is still very nascent, right? It's always been about these experiments of AI applied to create the next Rembrandt, right? That was actually a project that was created. So it's still very nascent for us. In terms of figuring out what are the key steps to grow in a community, I think it starts down with that niche, right? If I apply it to, if I create an analogy with music, it's about, you start locally, you start playing your bars locally, you start building that niche community and audience, making that they're hardcore fans, make sure that they are buying your merch, going to your concerts, listening to your whatever, Spotify streaming, etc. And then you start to scale slowly outside of that, right? I think for us, the fact that the majority of our supply side of our marketplace is in Latin America, we are from Latin America, and we really know well the market and the dynamics of that marketplace and how they operate in terms of creative remote work. So that has really helped us build a solid niche community, right? I think we're still very far of having a gigantic volume, but right now we don't need it as much, simply because we want to maintain that balance of the marketplace, both on supply and demand. And I think we're definitely getting some early, very interesting signals of how we can use data to improve the dynamics within the marketplace, and getting better, for example, quality candidates to match them with creative teams, because again, creativity is very subjective depending on the circumstance or the context. But I think that's something that really drives us forward, because every time that we see the great quality of a piece of work out of a creative team that the client did not know at all, and they create something out of the blue in very short period of time, we're saying, all right, this is check mark for product market fit, right? So yeah, there's multiple ways to go around it. I think every business has its own again, like insights they can piggyback off from.
Well, that's super helpful for founders in your shoes. So Germain, on shifting gears to B2B, Chargebee's had a lot of success with the freemium model and building sort of a network effect, finding new clients through that model. Do you have any tactics you would share to founders or B2B founders in terms of pricing model innovation or innovating their business model itself?
Yeah, that's a great question. So the first tip that I would say to founders is don't over optimize your pricing early on. It's okay to leave money on the table. You're optimizing for conversion and for users at the earliest stage. And one of the mistakes that everybody makes is they try to think of the perfect, most beautiful, most elegant pricing model, and customers don't understand it. And often you have to change it because it doesn't even map to your value metric. So keep it simple is the first tip. On freemium specifically, this actually, Krish's idea, so our CEO's idea for this came out of our conversation in the Uber, where as a previous founder, I told him that I wouldn't pay $200 a month for Chargebee because, to Jason's point, I hadn't raised venture, I was bootstrapped, and so every $200 was, precious.
Painful.
In retrospect, yeah, everything was meaningful. That was the first time. The second time, if I had to do this again, I would definitely pay the $200 because billing is painful. It's definitely worth the $200. Your engineer time is much more is much better spent on your product than on your billing. But that aside, he decided that we would offer the product for free until a customer grew to a certain level of revenue. And what I would say is important, I mean, it depends a little bit on your target market, right? So with the free product, we're targeting the early stage startups, not more mature businesses. And so those startups are cash sensitive, rightfully so. And if we can give them a little bit of a lift, then they lock us in early as an infrastructure. And then they kind of, this is the same reason why AWS, Oracle, all these give you free credits. And they kind of lock you in. If you're targeting more mid-market and you start with free and you're giving away too much sort of product for free, those customers will start to question the reliability of your business. Right? It's sort of almost too good to be true. So you really need to think about how you use freemium for who you're targeting. That said, if you are targeting mid-market, but you have a user-based model and you have a model something similar to like a Slack, it absolutely makes sense to have a free user area, because you want an individual in a business to be able to start playing around with it, because you're playing on the network effect, right, of a community. And so once they get to a certain size, you'll monetize them. Ultimately, I'm not a huge fan of the free forever model in B2B. I think that you need some kind of gate at some point that makes people make a decision so that they value your business and your service. Otherwise, you get, sorry for the term, but bottom feeders, right? You attract the wrong type of people who are, ironically, the most support heavy people are the people who pay the least. And especially if they pay nothing. And so you want to have some kind of gate for that, so that your business does have people who show some willingness to pay over time, unless of course you're able to monetize some aspect of their data or some other element that allows you to monetize their free usage.
I think that's really helpful. I mean, especially the enterprise segment, product-led growth is really effective with premium, but downstream it might not be as effective, right? So Tomas, could you, or do you have any strategies you'd share with founders in regards to leveraging, customer data platforms or marketing technology, and how they can actually use big data to improve the efficiency of their marketing spend?
Well, yeah, so I think two questions around that would be, yeah, definitely marketing spend and how that correlates to data points that you have in terms of, customer acquisition costs. How do you optimize conversion rates? So there's definitely multiple data points that fit into that in order to illustrate what's going to be your next step in order to improve those funnels, right? So effectively, in our case, since we operate from the outset as a marketplace, but we're trying to invest our time right now into SaaSifying some components of the marketplace, we're still handling two different sites with two different objectives. So it's basically almost like two products at the same time. So we try to be very careful as to where is it that we're putting everyone in the same funnel, and understanding, depending on the data that we're obtaining, be very diligent to understand and to not kind of drink the Kool-Aid just to think, oh yeah, we're getting a lot of traffic, but what are they actually doing? Are they engaging the way that we're expecting them to do? So I think for us right now, there's a lot of data points that have given us the decision to start investing a lot in product education, like literally inline product education, tutorials, very robust knowledge bases, things that can help you automate a lot of these FAQs depending on the individual. And I think today, even more so than several years ago, the level of customization until in which you can give a response or provide a response, it will generate a very good kind of customer interaction, right? Both, again, supply side or demand side. And I think that's super helpful, especially for us. Anytime that somebody leaves a Trustpilot review on the overall general platform for us, it's super helpful, because then we can leverage that in order to get more meaningful ratings between clients and supply side, right? So there's multiple avenues around this. And I think today there's multiple layers of tools that you can stack on each other, automate all of them without, reinventing the wheel and just generate and be very iterate a lot on those tools to make sure that you find the right mix of tech stack tools to get that data points across.
Absolutely. Customer education is crucial, because customer journey is evolving, right? It's going digital. Germain, how is Chargebee, addressing customer education? Do you have any strategies you're developing?
Yeah, I think that's a big part also of driving the PLG motion, and kind of, we have a pretty technical product. Has a lot of different ways that you can implement it. And so we launched Chargebee Academy a year ago, and we're also launching a user community. Now, that's something that takes a certain, you need a critical mass to get that kind of the community forums rolling. But once you do, it's this flywheel, and then it also becomes a great leverage for actually marketing. But yeah, I think it is about, now a lot of, even, they say products aren't sold, they're bought. I think it is about how much relevant data can you drive to a customer in their evaluation period and beyond, when they need it, where they expect it, so that they don't, we've all gotten kind of lazy. The stuff just appears, and we need to be where our customer is. Yeah.
Thanks. That's super helpful. So we're getting close to the top of the hour, so 2 last questions, but I'll pass it over to you, Tomas. Could you share a little bit more about your journey getting accepted into Techstars and then eventually receiving investment from Pharrell Williams, the renowned musician?
Absolutely. So I guess I'll start with Black Ambition and Pharrell, and I'd love also to provide a little bit insight of Black Ambition, because I think it's really relevant. They just opened their second cohort, so it's kind of like an incubator meets VC philanthropic view. So the main purpose of Black Ambition, which is Pharrell Williams fund, it's basically to invest in Black and Latinx founders in multiple kind of sectors, but they include kind of like financial tools, fintech, creator and creativity, tools as well, like Web3, stuff like that, and multiple others, right? Basically, they opened this up kind of like as the first iteration last year. We simply applied directly. Again, we were getting kind of like early traction more on the supply side of our user base. And yeah, like after the process, they basically selected a few, a handful of companies where they invested directly. And of course, like the doors that opened has been not just because of the Pharrell Williams stamp, let's say, but also because of the level of mentorship that we got. And funny though, through that process, one of the persons that actually saw me pitch at the end of Black Ambition was part of the, let's say, recruitment team of Techstars. And that person told me, hey, your company fits really well with what Techstars is looking for right now in terms of future of work, creator economy, also kind of like the Americas ran out. So I think it was really good. And the process went really quick in that moment, literally from 1 week into the next. We already got a couple of interviews with the managing directors. And I think it's also a bit of momentum, right? Like creator economy wouldn't have been such a theme if the pandemic would have happened, right? So many people like investing a lot right now in NFTs, for instance. It's literally a digitally native asset right now. And who knows, let's say post-pandemic, how that will evolve. So there's multiple conversations that I think momentum really fit well with us, and that helped us get to Techstars and Black Ambition. And I think right now where we stand is that for us, particularly me, I don't come from a traditional, let's say, business background. As I mentioned, I'm a musician from Colombia, and that's, I love ideas, I love to execute them. But again, I don't come from a, let's say, more traditional pedigree, like finance or economics or business background. So I think in that sense, I was always optimizing to increase my network as much as possible, my team's network as well, and make sure that we could tap into any of these networks in order to grow the business, to let's say access more opportunities for capital, and just drive the business forward. So I think that's been really good. And by the way, I mean, if anyone wants to connect and perhaps talk directly with either Black Ambition or Techstars, I'd be more than happy to connect people as well. That's been super helpful for us. Any startup can make their own decisions too, but yeah, it's been super helpful.
Awesome. Thanks for the inspiring story there. So Germain, I'd love to hear about your thesis. Chargebee is involved a lot in M&A. What kind of companies are you looking at partnering or even acquiring down the line?
That's a good question. We are obsessed about delivering value through growth for our customers, right? So founders who share that obsession are a good natural fit. And I think the most important thing, yes, we have We can talk about the product adjacencies that we're looking at and things that, you know, the gaps that we may be trying to fill through either partnerships or through acquisitions. But once you remove those categories, what we really look for is a culture fit and a way that, like, a shared view on the world, because that's the actual most important point in getting teams to work together. So we've completed 4 acquisitions in the past 6 months. One of them was an acqui-hire, so it was a bunch of talented individuals who came in and joined us to augment our engineering team. The other 3 were product hires. One of them was a revenue recognition, so reporting and compliance tool that has a lot of technical requirements to it that we thought it was easier to acquire, and the Revlock team was a great partner, and so became an acquisition through partnership. The other one is about receivables, helping customers recover revenue that's unpaid, and then the last one, right back, is a retention tool, which is really interesting to make sure that you retain your customers who want to cancel. So I think we're looking for these kind of areas that are offshoots of what we do as a core platform, but ultimately where we basically fall in love with the founders and the teams for the way that they're thinking about the problem. And then we figure if you bring a bunch of smart and passionate people into a room together, they're going to continue to create great things. So,
excellent. Well, thank you so much, Tomas and Germain. This has been a really insightful panel. I'm going to pass it over to Tara now and to start the startup pitches.
Thank you.
Thank you.
Thank you.
Thank you so much, Ash, and huge thank you again to all of our panelists for joining us today. We really appreciate your time and look forward to having you back. So without further ado, I would like to get into the pitch portion of the evening. I know that's why you're all here. Before we get into the startups, I would like to introduce our judges for this evening. First, we have Juan Scarlett, who is the managing director at OneValley Ventures. We have Amar Alali, he is managing partner at Oasis Capital. And finally, we have Sanjay Goyal, he is the SVP of product at Oracle. So I'm going to go ahead and give our wonderful judges a quick chance to introduce themselves. Maybe we could kick it off with Amar.
Hey, everyone. My name is Amar. I'm the managing partner for Oasis Capital. I'm also co-founder, president of Eden Geotech, a deep tech company in the East Coast. It's a pleasure to be here.
Thanks so much, Amar. Maybe Juan, over to you.
Sure. Thanks, Sarah. Juan Scarlett. I'm the head of OneValley Ventures, where we work with partners to develop and execute venture investment strategies, leveraging the OneValley ecosystem. Recently launched the OneValley Fund, a pre-seed and seed stage fund that focuses on investing in standout digital transformation companies from across the OneValley ecosystem and partner networks. We are actively investing and have been since last April. I've been in the venture capital industry for the past 14 plus years and in technology investment and research for the past 20 plus years. So yeah, excited to see the pitches today. Thanks.
Thanks, Juan. Sanjay, we want to wrap us up?
Yeah, hi, I'm Sanjay Goyal. Thank you for giving me a promotion. I'm a VP product management at Oracle in the database team, focused on simplifying people building applications with the Oracle database, with a variety of data. Happy to be here, and thanks for having me.
Thanks so much. Thanks again to our judges. I'm going to go ahead and introduce our 7 amazing founders that you guys will have the very difficult task of judging today. So today we have Andre Calvente. He is Global Communication Lead and Partner of Alana AI. We have Moshe Shadman. He is CEO and founder of AnyLog. Juan, he is CEO of Fanalyze. Herman Weintraub, CEO and founder of Exponam. Vikrant Dubey, co-founder of Laker. Howie Altman, CEO and founder of Perciever AI. And finally, we have Thomas Rump, CEO of Measure.io. A quick reminder to our audience about what is at stake tonight. Our grand prize winner will be walking away with $7,000 in cash and $10,000 in Oracle Cloud credits. Our Audience Choice Award will win $1,000 in cash. For that audience choice, we need your opinion. So We're going to go quickly over the ways that you as the audience will participate in this selection. So for those of you joining on Facebook, LinkedIn, or Twitter, or any of our other live streams, be sure to drop by the Passport page so you can submit your votes as each company pitches. For those of you that are on the Passport page currently, go ahead and click on the pitching startup and put in your vote. Each vote will determine the Audience Choice Award, and by rating, you yourself will be entered into a raffle for the chance to win 1 free year of Passport. So with that, I would like to go ahead and welcome our first pitching startup. We're going to kick it off with Andre Calvente, Global Communication Lead and Partner of Alana AI.
Hello guys, nice to meet you. My name is Andre Calvente. I'm here to introduce you to Alana, a Brazilian startup. And I'm here because if you are a market and customer experience professional, there are more than 7,000 tools for that. Zendesk, HubSpot, Sprinkler. And the problem is that it increases a lot the operational cost because you have to hire different tools for each need, affecting the entire service flow. And in the end of the day, decreasing customer satisfaction because your customer don't get the right answer in the digital channel they pick to talk to your brand. So we created Alana, the best non-English artificial intelligence for customer experience. When I say non-English is because we built Alana from scratch, speaking natively Portuguese and Spanish. So different from other solutions in the market, when they pass through a translation level, they lose a lot of personality from English to Spanish or Portuguese. So we collected a lot of data, like 10 years of public data and 17,000 brands in social media to help Alana easily identify this user and his history with the brand. After that, extracting and interacting and extracting the emotion from that message to finally generate a superhuman, genuine interaction. You can plug Alana in any digital channel, for example, Facebook, Twitter, or Instagram, or private channels like Facebook Messenger, email inbox, or WhatsApp. And she works 24/7 in omnichannel with unlimited volume. Actually, for Alana, if she got like 10,000 messages at the same time, it's good for her to keep learning about your brand. In the end of the day, she humanizes all digital channels at scale. Your humans can focus on what really matters. They doesn't have to pick and copy and paste questions and answers, and the customers get satisfied. One brief recent case with Diageo, Alana got almost 100% accuracy in the answers. The average answer rate on digital channels from 28 to 86%, and she delivered 28 times speed boost on responding channels. Our revenue model is a SaaS monthly subscription focused on large companies and mid-size, and our pricing is about $2,000 to $20,000 per month. We worked with big brands like Coca-Cola, ESPN, Heineken, and we are consolidated at global ecosystem. Back there, before Alana being born, like when we were just Nexus Edge, we've been accelerated from Oracle Startup Cloud in 2017. But when we reboot Alana in 2019, we double revenue year by year. In 2020, we got named 100 startups to watch in Brazil. Last year, we were named one of the top scale-ups according to Endeavor. And as I told you, since our reboot, we double revenue year by year. Last year, we got an ARR of $2 million. From Angel to Seed B, we fundraised more than $3 million. And now, a few hours from now, actually, I'm moving to Mexico to start our expansion to Latin America and build our headquarters there, because we are going to launch a new platform, totally self-service for any size business. And we are heading to a Series A, about $10 to $15 million. Our team, our founders are Marcel Gentara, one of the creators of Coca-Cola's in-house digital agency. Marcellus Amadeus is our nerd, specialized and master in machine learning and NLP at Stanford. And I'm Andre Calvente, Global Communication Lead and Partner, and I'm under your disposal to any question. Thank you.
Thanks so much. Let's head over to our judges. We could get Sanjay and Juan to turn on their video and mics. Maybe Amar, would you like to kick us off?
Yeah, sure thing. Thank you for the really interesting pitch. Just going back to the business model, seems like you have a wide range for cost, or let's say a model ranging from 2K to 20K. Can you walk me through what's the features? Why is there a big gap? And maybe pick an example of what the service for 2K versus 20K would look like. And what's the typical client that would take the 2K versus the 20K?
Yeah, definitely. We charge by model and digital channel picked by brands. So for example, some brands, we have this case of Diageo, where they picked different brands like Johnny Walker, Tanqueray. They plugged Alana into Facebook, Instagram, on public feed, for example, that we call our skill named Alana Reply, that we are talking about public data and public answers. But also they hired Alana Chatbot for private channels with more sensitive data. So it depends on the model you hire for each channel and how many brands you plug into Alana. So that's why we have a big range from 2 to 20,000. And that's why we also are heading to offer our solution to any size business, because we believe that we can deliver like ROI-based pricing for the automation you need for your business.
Okay. Thank you.
Thank you, Amar, for the great question. Juan, would you like to take the next one?
Sure. Thanks, Andre. Super interesting. I guess I'm curious, how are today at least, or maybe it's not happening today, or maybe it might happen in the future, but I guess I'm curious as to how you're integrating with, sort of this, these 7,000 plus marketing and customer experience tools that you mentioned earlier to make sure that you're actually getting kind of the full view of the customer from those other tools and the data that's collected there.
Okay, actually we have like some native integrations. As we pass through the Oracle Startup Accelerator, we have like the Oracle Cloud like natively plug it with Alana, but also we believe that we have to build and deliver the integration for our clients to keep their operations as they are. For example, so any of those big tools like Zendesk, Movidesk here in Brazil, and HubSpot, we have the integration needed for you to just input Alana into this as an intelligence layer. Then you can keep your process because you already spent money on that and whatever, and Alana can just work and do the handover of these tickets or messages to your human team in the platform you want. So that's why we build like more than 1,000 integrations.
Thanks, Juan. Sanjay, would you like to close us out?
Yeah, Andre, thanks for the great pitch. I'm just curious, who is your customer when you go to a brand or you go to an agency? Are you selling to the agency? You're selling to the brand, and who's the customer who's making this decision to say, hey, I'm going to use your chatbot?
Yeah, actually, the agents used to be our previous clients when we were just a data collecting company, but now they are just a partner to help us to drive growth. But our main clients are brands with a huge volume of messages, so they can see the ROI when they do some automation, like a percentage of automation that Alana can deliver in that channels. So then these are our clients. So everybody asks me like, well, but what is the segment? Mainly they are like wealth and fintechs and communication companies are like, they have like a better fit with us because they have a lot of volume of interactions in all different digital channels. But that's the way we work, and that's why we are now heading to try to solve problems for small and medium business also, because they also need automation in a easy way with non-technical approach. That's our goal.
Okay, thank you.
Thank you.
Thank you, Andre, for the great presentation. And thank you to our judges.
Thank you, Tara.
Up next, we have Moshe Shadman. He is the CEO and founder of AnyLog. Please join me in welcoming him to our virtual stage.
Hi, My name is Moshe Shadman, and I'm the founder and CEO of AnyLog. AnyLog is a platform to manage IoT data, but rather than moving the data to the cloud, AnyLog is able to manage the data at the edge and overcome the challenges that companies face in managing IoT data. Let's see how IoT data is managed today. Data generated from devices is pushed to nodes at the edge near the devices. These nodes do not have a lot of compute power, and therefore the data is pushed to another group of nodes called the fog. From the fog, the data is pushed to the cloud, where it is organized such that it can service the applications. Pushing the data from the edge to the cloud is not a scalable approach and does not provide real-time insight and is very expensive. The software deployed at the edge is proprietary. The reason is that there are no standards at the edge. Companies need to figure out the approach and build a solution. Once the solution is available, it needs to be deployed and managed in thousands of nodes, a task that requires significant resources. And once the data reaches the cloud, real time is lost, so is the ownership of the data, and managing large volumes of data in the cloud is very expensive. Let's see how AnyLog manages the data. Devices generate the data, but rather than proprietary software at the edge, AnyLog is deployed on the nodes that receive the data. The claim is that this is the only thing that needs to be done. Deploy AnyLog on the edge, and from here on, all is automated and is available to the applications. Using AnyLog, the edge is transformed to a virtual cloud that is able to service the application with the data in real time, with 100% automation, and without a single line of code. To summarize, rather than moving huge volumes of data from the edge to the cloud, we use virtualization to move the queries to the data. AnyLog is installed on the edge nodes such that these nodes create a decentralized network of nodes. An application only needs to connect to a single node in the network. This node is able to deliver the data to the application as if all the data is unified and hosted locally on the node. By doing so, we remove the dependency on the cloud, lower the cost, and service the distributed edge data to the applications as if the data is organized and unified on a single machine. The business model is an open source distribution, and next to it, there is a licensed subscription-based version. We were invited by the Linux Foundation to be part of the Linux distribution for edge deployment. This would bring huge adoption. We're currently in POCs with some of the largest IoT companies like NVIDIA and TIBCO. Successful POC means that AnyLog is integrated with their edge products, making their customers AnyLog users. We are raising 2 to 3 million to support the POC processes and the open source distribution with the Linux Foundation. A few words about the people behind AnyLog. Throughout my career, I've built companies and products in the area of big data. Prior to AnyLog, I was a founder of a database company called ScaleDB that merged into OSIsoft, one of the largest IoT companies. AnyLog is supported and endorsed by a group of industry experts and academic researchers. I would only mention that AnyLog technology is leveraged today in academic research in the University of Maryland and UC Irvine. Thank you for participating in the talk. I believe that AnyLog would change the way companies interact with IoT data. I'll be happy to answer your questions, and please approach me if you're interested with additional information.
Awesome, thanks so much. Let's head over to the judging team. Juan, could you kick us off this round?
Sure. Thank you for the pitch, Moshe. It's super very interesting. Actually, I'm curious. A couple items. One, I guess on the go-to-market. So you mentioned a couple of or several very big names that you're starting proof of concepts with. I'm curious as to how you were able to attract those big names to the solution so early, and then how you replicate that, when you're going to market in the future. And then secondarily, I guess I'm just I'm more interested in figuring out how or when you expect other applications to start being built on top of your AnyLog platform in the future, or if that's even necessary for users to actually get the full benefit out of it.
Yeah, great. Let me start with the second question, because the answer is simple. The applications see the same thing that they see when they connect to the cloud. It's a simple interface from it, whether it's an AI application or visualization, doesn't matter what the application is, it connects to AnyLog. It doesn't see the difference. To your first question, what I can tell you is, my previous company was a database company. By the way, we integrated with MySQL, which is an Oracle product, and it was a very hard sale. Here, every company that we approach to and show them a demo of AnyLog wants to start a POC. It's such a burning thing to try and deploy things at the edge. And as I said in the presentation, there is no solution out there. So it makes it very easy. We're kind of surprised. We have now more POCs than what we could support, and that's one of the reasons that we want to scale the company.
Thanks. Sanjay, do you have any questions for Moshe?
Yeah. A great pitch, Moshe. I'm just curious, what's your core product? Is it the combination of hardware and software? And do you do your own OS? I saw on one slide it says some OS extensions. So do you have to do your own operating system here?
Well, it's only software, and if you think, I'll explain to you how that works. So I think you'll understand. When this node that virtualizes the network gets the query, what this node is able to do is very quickly determine where the relevant data resides, because you could have millions of nodes at the edge. Each one of them has a portion of the data, but given a query, let's say, what is the electricity usage in Palo Alto in the last 30 days, out of the millions of nodes, there would be a subset, let's say 100 edge nodes that have the relevant data. So we're able to figure out dynamically in real time what are those nodes, and then we ship the query to those 100 nodes, and all of them are processing the query concurrently. So we're able to leverage massive parallelism here. All of those return result to the node that issued the query. So it's kind of MapReduce, but dynamically on the fly, where everything is optimized for IoT data. There is a lot of technology here, and as I said, there is research. It triggered a lot of interest on the academic world. I'll be happy to show you more details, but that's the approach. I mean, it's kind of nail down where the data is and push the queries to the data.
Okay.
Amar, any final questions for Moshe?
Yeah, really great presentation. Couple of thoughts. I show the icon of oil and gas or a rig, and this is one of the main applications for edge solutions. So if you have an oil and gas operation, being able to spot and process the data in real time is a very critical element in their day-to-day operations. But another edge to it is data safety. One of the kind of venues that have been expanded on within this sector is ability to process things in the edge without it need to send it somewhere else. How do you think AnyLog would contribute to providing any safety layer, if any, for this oil and gas company that want to process data in real time? They want to do it efficiently, but they don't necessarily have the computational power to run it at the edge today. Is there any advantage with AnyLog usage here?
Yeah, absolutely. And our first customer, actually, the first company that used it was the oil and gas, exactly to solve those problems that you mentioned. They're doing AI on oil and gas production line. And what they're doing, the AI is able to change dynamically the pressure in those tanks in the production line such that they make the production line more efficient. And what AnyLog is able to do for them, because the data is there at the edge, what we're able to do, we optimize it such that for the AI process, they think they work against a single database or the cloud, but the data becomes available in real time. And that's what enables them to run the AI in real time. And the value here for the AI process and the AI company that runs the AI is that they don't need to deploy the databases at the edge. They don't need to integrate the data. They don't need to deal with high availability at the edge. All of that is built in the AnyLog platform, and you get it kind of out of the box. You deploy AnyLog on those edge nodes of this oil and gas use case, and then the data is being serviced in an automated way without the need to do anything at the edge. It's completely automated.
Okay.
Hi, my name is Juan, CEO and co-founder of Fanalyze. We are building the sports search engine and analysis platform to speed up research and to help fantasy sports players and sports bettors win. Why? Because everyone wants to win, but they just don't have the time and data to do the research needed. It's difficult. You can see Americans wage about $150 billion a year. Only a handful are profitable, and they spend about 10 hours a week on research. We needed to speed this up and provide users with relevant sports data. So we built Fanalyze, a sports search engine and analysis platform to simplify the process by aggregating relevant data and using search to quickly analyze and compare players or teams. We offer advanced stats and also predictive analytics and believe can save users 4 hours per week. Here's a quick demo of Fanalyze, a patent-granted comparison process, a side-by-side analysis with all the data you need to help you win, and you customize this data to your preference. Everyone has a different way of analyzing data. Sports data and analytics is rapidly growing. Fantasy sports and sports betting have over 100 million Americans participating. We want a piece of the exploding sports betting market, estimated at $215 billion by 2025, and specific the $2 billion market with research, analysis, and data. Fanalyze disrupts the sports data space, similar to how Google disrupted portals such as Yahoo, AltaVista, and Excite by focusing on search, aggregating accurate sports data, stats, content, and news. We could say we're the #1 fantasy sports search engine with the vision to be the Google of sports data. We launched our mobile app with MLB, NFL, NBA data. We're testing cricket now and recently launched a Winter Olympics app. We plan to add football or soccer data and esports data in the next 12 months and been testing digital marketing channels with market influencers to increase our user base. We have over 15,000 users. We saw 70% month-over-month growth during the NFL season, and our users love our app, the 4.9 App Star rating. Fanalyze is trademarked with a utility patent, 1 patent pending. We're now licensed in 7 sports betting states and have partnerships with FanDuel, DraftKings, BetMGM, Sportsbook, to name a few. We're offering a freemium model to allow users to subscribe for advanced data with customized analysis. We're now getting revenue through subscription and affiliate marketing. As we know, 30 million Americans will place their first legal sports bet in the next 3 years. And we see sports betting companies estimated to spend about $2.1 billion this year to acquire new users. We definitely want a piece of that. Our team is ready. I grew up in the tougher side of Silicon Valley, filled with drugs and crime. My brother and cousin was in a gang. Fortunately, sports kept me out of trouble, playing baseball, basketball, and football. That is our high school football team in the background. My co-founder, Chris Longboy, league champs out here. We have a combined 41 years experience in engineering and product design, working for several tech startups in Silicon Valley and also big companies. Chris worked at Motorola and Green, working with terabytes of data and analytics. Worked at several tech startups and an Apple, where I learned simplicity and user-friendly is a competitive advantage. We have a great team of advisors, to name a few. Eric Glover, who built Ask Jeeves or Ask.com. David Meltzer, marketing guru, who coined the phrase, "Show me the money," in the Jerry Maguire movie when he was a CEO at Steinberg Sports Agent. And Gavin Walters, who's been in the sports betting industry for over 10 years, also a Bet365 affiliate manager. Raising a pre-seed round of 500,000, 65% is committed to get us to 10,000 in MRR and 20,000 in monthly active users, also getting more licenses. Let's team up to change how each fan analyze sports data. Thank you.
Thank you so much. Great presentation.
Thanks, Sarah.
Let's head over to the judges. Let's see, Sanjay, would you like to kick us off this round?
Yep. Thank you, Juan. Great
Thanks,
presentation.
Sanjay. Thank you.
Just curious on where do you get your data from, right? Because this is all about, sports and data, and, does the data cost you something? And, how does that factor in your pricing?
Yeah, so we aggregate the data from, the top sports sources. We also license the data from Sport Radar. We don't want to get sued from the league, so that's I think that's safe for us to do. So those two ways right now is aggregations and licensing.
And does that factor into your costs being higher than others, or how do you kind of compete on pricing with data coming from others?
Yeah, we try to be affordable and also be competitive. We want to provide the best stats, but we're aligned with what our competitors are offering. So, we don't increase price, but we want volume. It's a consumer app, so we definitely want mass audience there.
Okay.
Thanks, Sanjay. Amar, over to you.
Yeah, thank you for the great presentation. This is really interesting. A couple of things. The 70% growth month over month, how long did that last? And if you remove that small period, what is your overall average month over month growth, and the anticipated portion of growth?
For the NFL season, that's probably 4 months in an average, because there's we have 3 sports, so we're not seasonal. I think average is about 35% month over month growth.
Regarding your IP, you guys
Yes.
have 1 utility patent. Is that granted? And what is that IP really is?
It's a comparison process using search to compare sports entities, whether it's players or teams. So you could search 3 or 4 players to get a side-by-side analysis, or teams. That is the patent we have that's already granted. The sports, the patent pending one is on prop bets analysis using conversational queries to provide analysis through text or voice. So that's pending, and we have actually a prototype on that.
Okay, thank you.
Thank you.
Juan, you want to close us out with some questions for Juan?
Sure. Thank you for the pitch, Juan.
Thank you.
I'd love to know more about the partnerships that I think one of the slides mentioned with DraftKings and MGM, et cetera. We'd love to learn more about those partnerships. Are you integrated with those platforms, and are you actually I guess gaining users through those channels as well?
Yeah. So partnerships with the sports betting companies, they're spending about $2.1 billion to acquire users. So we're sending new users to them. So Fanalyze provides an analysis. We give you predictions. Go in and bet at DraftKings or FanDuel, and we get a really nice commission for that. There is a percentage per bet. We're not there yet, but that's definitely a possibility in the near future.
Okay. And just one last thing, if I may. I'm curious as to how you are acquiring customers today. Where are you getting your customers? How are you finding them?
Yeah, we're just right now testing digital marketers, influencers, and Google ads, Facebook ads, but definitely found a good path that we will scale pretty soon.
Thank you.
Thank you.
Thanks, judges, and thanks, Juan. I'm excited to use your product for the OneValley fantasy draft this year.
Thanks.
All right, up next we have Germain Weintraub, CEO and founder of Exponam. I'd like to welcome him to the virtual stage.
All right, can everyone see me? Fantastic. Thank you, Tara, and good afternoon. I'm Germain Weintraub. I'm co-founder and CEO of Exponam. And let's jump right in. Data is exploding. 90% of the world's data was created in the past 2 years. Nope. There we are. So this afternoon, we've been hearing about the promises that data will bring. It's an AI-driven world, predictive machine learning, autonomous vehicles, green supply chains, growing profits, these pitches that you're hearing right now. But you also know about the problems: security breaches, slow migrations, inability to download and share large data sets, massive corporate spending on cloud and data storage. Simply put, data's explosion has outpaced our ability to keep up with the challenges, and it's keeping us from recognizing the value that data should bring. Now, no offense to Jason from Oracle from earlier, but or from the presentation just a little while ago, but data does not make it up to the cloud and then just stay still. And it doesn't just sit at the edge and not move. It's constantly moving. It's moving intra-cloud, intra-company, inter-company, from cloud down to users and out to the edges again. So it's not surprising that we have continued to have data problems. We've continued to use the same data files to move, distribute, store, and access data for decades. CSVs were created in the 70s when there was a different scale of data. The volume of data that we handle now and our needs for security, efficiency, and provenance were all unimaginable then. In 2017, my co-founders and I had had enough. It was time for us to solve the world's problem with data. So with Exponam, we're introducing the world's most compressed, most secure, fastest access for massive data sets. We've created the data file to support the world's data growth through the 21st century. Great, you say, a new data file. Well, so what? I'll tell you. Ordinary users, business users, for the first time ever, can download, share, and explore files with hundreds of millions of rows in a spreadsheet on their laptops or their tablets. They can filter, they can sort, they can check the provenance and associated information of a given data set, and they can push it to Excel with a single click. Companies will save billions of dollars interchanging and storing data. Data scientists working in the cloud with Spark or Snowflake can query data 5 times faster than they can with Parquet. So where are we at? We released our first beta in early 2019. We didn't get it right. We revamped our initial versions to meet customer demands. And now, 2 years later, after product market testing and conversations with over 80 prospective customers, we're ready for a commercial launch. So who are we? Well, I'm a technologist with 25 years in the financial services industry. Done everything from creating electronic exchanges and analytics platforms to running a global technology consulting practice for the alternative finance sector. My partner, Roger, has decades of experience at Apple, Microsoft, and Sun. He led Microsoft's SQL Server Group. He developed cryptographic systems for the US government through the Cold War. Jeff has spent decades restructuring organizations and finding value within the tech sector. For those who are interested, I'd be delighted to provide product demos and go into detail on the market as well as our go-to-market plans. We're commencing a seed round and are particularly interested in investors with deep relationships in cloud, analytics, SaaS, and fintech. And with that, Tara, I'll turn it back over to you and take your questions.
Thanks so much, Herman. Great presentation. Pass it over to Amar. You want to kick us off?
Herman, this is a really great presentation. I've dealt with this pain for a good amount of years in my life, dealing with big oil and gas data, and it's just sending an email. That data set was a nightmare because it was just picking data at a high frequency and we collected for days. What's your secret sauce? I mean, we talked about the value add and we talked about the product and application, and I think the market speaks for itself. And I wouldn't ask about the go-to-market strategy. I'm curious about the technical secret sauce. How are you able to aggregate a huge volume of data with low size and being very flexible in how you go about filtering and the metadata on top of it?
Yeah, of course. So the data files themselves are proprietary, but what we've done is we're looking at, we've taken a columnar view of the data sets, right? So much like a Parquet, so we're looking at a more modern representation of that data. But in addition to what a basic columnar set does, is our data files are immutable, which means that we're effectively, when we write the file, we're able to go through and apply a bunch of heuristics to compact the data further than they typically are. So we're able to end up compressing the data better than with traditional codecs for compression. So to give you an example, we tend to be on order 40% to 3x better than Parquet snappy compressed data, which puts us at, if typical compression codecs give you a 10x on basic delimited data, we tend to be 50 to 80x better.
Is there any hurdle? Is there any set of, I don't know, parameter that could reduce the compressibility of data or the efficiency of your algorithm?
Yeah, so every data set is different. And if you deal with data codecs, then you know that well. We optimize the data by column segment based on the type of data within it. So we are strictly typed. Certain types of data compress better than other types. So floats better than string, et cetera, et cetera. The typical data sets that we've been doing our benchmarking on are on financial data sets, which are a combination of numerical data as well as string data.
Okay.
Anya, you want to jump in next?
Oh, sure. Thank you, Herman. Thanks so much for the presentation. I'd love to learn more actually about the go-to-market strategy.
Sure.
I think you mentioned some of it in the presentation that we received, but I'd love for you to use a little bit of time here to talk a little bit more about your go-to-market strategy as you relaunch, as you launch the product today.
Yeah. So there's a bunch of different dimensions and elements to that. When we first launched, just to give you a flavor of what it was, we really believed that this was an end user last mile distribution issue, and we concentrated entirely on that segment of the problem set. When we first came out and we started POCs with global banks and various different organizations, we rapidly were asked about headless operation and interconnectivity of systems and different clouds. So we had to go back and then sort of rework, not rework, but expand that offering to include API for headless operations. So we now have access .NET based API, Java-based API. We have specific Spark adapters. We have command line interfaces, as well as those end user interfaces. So that's what happened with a lot of that rework. Our go-to-market, we're looking at a 4-pillar strategy. We have our global enterprises, regional enterprises. We also looking at the data science community with distributed compute, and we also look at a plugin community. So we see .big files as really being a natural extension to every BI and reporting platform that's out there. Today, from any of those platforms, you can say, hey, let me grab that a small piece of that underlying data and bring it down as a CSV file. Well, we want that choice to be .big files. We want you to be able to say, don't just download 1,000 rows of that interesting subsegment of data, but if that subsegment of data is 100 million rows, let me grab that and download that as well. So there's a tremendous sort of different approach for each of those pillars. Incremental to all of that, there's a freemium model. We license on there's a ton of information, and so I apologize, but we license on the creation of data. So we provide licenses to organizations to generate .big files. The distribution and the access is entirely free. So we've stolen a playbook from Adobe on that front. You don't have to pay when you receive a file, and all of your access points are free, and on and on and on.
Thanks, Herman. Sanjay, can you close us out?
Yeah, sure. Thanks, Herman. Seems like it's a proprietary format for compression. I'm just curious to hear about the customer feedback you have on, hey, here's a new format, and you are talking about an entire ecosystem of not only the format of the file but also connectors. Now, do you think that's a lot to be done in this area?
Yeah. So
where are your challenges?
It's a very interesting question, and it begs a constant sort of question with the industry. So today, yes, we are starting it as a proprietary format, just as PDF was started out as a proprietary format when it was introduced before standards were published. the biggest pushback that we get is within the larger distributed work space, right? So it's the, okay, well, in cloud, in Hadoop, I have open source file formats. I have Parquet, Avro. Why would I go to a proprietary? And that there is a very real push and a very likely scenario where we move to an open source model as well, where we move to an open source with premium features, where we'll enable security features above and beyond on the premium, where we'll have incremental licensing capabilities on premium, but that will be made to be an open source standard so that it can work in those spaces also. But it is an interesting conversation that we've been having.
Yeah, but if you can pull it off that everybody's going to pay you for creating and accessing the file, more power to you.
Well, right. So never to access. So everyone would be free to access. But currently the model is that when you're generating files greater than 3 million rows, and if you want some of the extended security capability, then that has to be licensed. Otherwise, it is free.
And then one final question, Jay, if I may. You talk about visualizing, right? So you're kind of comparing to Excel and all. So do you see people wanting to visualize 3 million rows, or are they just okay visualizing, a few rows and saying this is the format I trust, my data is going to be in a file somewhere and I can just transfer it?
It's really interesting. And the answer is no. People want the data in a spreadsheet. For 20 years, or more, we as technologists, we've been trying to get our user communities off of Excel, right? We've been saying, no, we don't want you to use Excel. We have these tools. We're going to give you this. We're going to give you this. And today, those generation of tools are our BI tools and our visualization platform tools. But the reality at the end of the day is that the users are using those BI tools, and then they're downloading the subset they want, and they're still pushing into Excel. And our approach we said, you know what? Let's stop trying to make the users do something they don't want to do, and let's meet them where they are. Let's give them data that in a spreadsheet, the way that they can handle it. And then what do they do with, and then you say, as a technologist, we always said, well, what would a user do with 10 million rows in a spreadsheet? They can't look at everything. The reality is they just want to do the basics. They want to filter it. They want to sort it. They want to find what they were looking for. And then they just want to push it into Excel. So that's exactly what we enable them to do. We enable them to easily share and distribute data, to open it up in a spreadsheet with one click, filter it down to what they're looking for, and then take that smaller subset and push it into Excel.
Okay.
Thanks so much, judges, and thank you again, Herman.
Yeah, thank you.
Up next, we have Vikrant Dubey, co-founder of Laker. Please join me in welcoming him to the virtual stage.
Hi everyone, my name is Vikrant. I'm the co-founder of Laker. We all know that big data and data science projects can be really hard and expensive. Why big data is hard? Because it involves infra creation. Setting up code environment can be a pain, and creating and scheduling jobs involves additional tools like Airflow, where we have to write code and maintain these tools as well. But with Laker, it is one integrated solution. Cluster creation is handled automatically. No need to set up code environment. You get integrated Zeppelin notebooks for creating and scheduling jobs and workflows. It has no code interface. A little bit of product demo to show you how simple it is to create a pipeline in Laker. We create a new workspace. We choose the location where we want to store data. It can be S3, Google Cloud Storage, or Azure Storage. Server configurations, and we create the workspace. We choose our newly created workspace, go to notebook, create a notebook, and select a template. In this example, we are creating a Spark table from a Postgres table, fill in all the required details. And when we click on create notebook, it will generate the required code for us. And as soon as we execute it, it will start creating the Spark clusters. You can see the status of the Spark cluster in the down in the below bar. And this notebook can be scheduled as a job, or it can be made part of a workflow. Why Laker? The infra is managed by Laker, so it only creates infra when you actually need it, saving you a lot of infra cost. All the favorite languages by data engineers is supported. It has no code interface for scheduler and workflow creation. It has lineage view to view all of your data workflow in one view. You can click on these blocks to get info about your data set, or click on the notebook blocks to view the previous runs and edit the notebook from the lineage itself. For ML and data science needs, it has Docker image builder to install and run custom libraries. Target market size is not a problem. Big data market is pretty huge. And this is our competitive landscape. This is where we want to be. This is not where we are right now. There's a lot of work required. We want to be as simple as Snowflake and as cheap and powerful as Databricks. And we started Laker as an open source project. It is currently being used by 3 users, 2 in India, 1 in US. And we are trying to convert them into our paying customers. Our typical ticket size should be around $1,000 a month. And in future, in May, actually, we are going to launch our self-sign-up SaaS tool. And this is our team. I have 5 years of experience in data, and rather the school dropout who is contributing full-time. I actually work part-time. I have another job to pay our bills and manage company expenses. Sajal is almost working as full-time as our, he's working for our marketing content. That's all. Thank you.
Thanks so much, Vikrant. Sanjay, would you like to kick us off?
Yeah, thank you. No, that was a great pitch, great product demo. Just curious to see how you came to solve this problem. What is unique about your team that brought you to this, and why do you think you could compete? Being as easy as Snowflake and as usable as Databricks.
Yeah, that are very ambitious claims. So in our previous startup, we were building a data observability platform, and all our clients asked us to do data engineering for us. We tried a lot of products and nothing was too simple for us. We wanted to do data engineering simple, easy, and fast. And that's where we started building this open source project. And when it's picked up, then we thought of turning it into a business.
Awesome. Yeah, thanks.
Amar, you want to jump in here as well?
Yeah, thank you for the great presentation. Just going back to the business model, I know you have 3 users right now, and they're pretty much just your first adapter. What do you envision the SaaS model would look like in terms of cost, of features? Do you have an idea yet, or is that something to be decided later? And since you're in the early stage, how do you plan to go to market and get your product out there as a service?
So first question, for the SaaS model, we'll be charging 25% of the infra cost used. So suppose that your bill is $1,000, we'll charge the customer $1,250. And our go-to-market strategy is basically content and solutions. So we'll be providing templates. So suppose that you want to make a customer data platform out of Laker. So you just download the whole template, and then you get all the artifacts you need to build your customer data platform.
Is there a specific sector or jurisdiction you want to target first, as you think there would be ideal at first adapter, first users? Have you put any thoughts there?
Yes. So our first users are going to be those whose data is just gone so big that they want to migrate to technologies like S3, Google Cloud Storage, and they might be using Redshift, Snowflake, or BigQuery right now. So those will be our target customers for now.
Thank you.
Thanks, Amar. Juan, would you like to close us out?
Nothing from me. Thank you so much, Vikrant.
Thank you to our judges. And I want to give a quick shout out to Vikrant. Thank you so much for staying up late to just tonight. It's much appreciated.
Thank you.
We have 2 more founders lined up to close. So just want to give a quick reminder to our audience. Don't forget to rate each company at the bottom of the screen for your chance to win a free Passport membership and decide our Audience Choice Award. So up next, I'd like to welcome Howie Altman, CEO and founder of Perciever AI, to our virtual stage.
All right. Hello, everybody. I'm Howie Altman. I'm the CEO and a co-founder of Perciever AI. Thank you for listening. So, as I think we probably all know, existing AI is limited. And instead of just reading this, let me describe what I mean. Pretty much every technology out there is based on deep learning / neural networks. And actually, if anybody saw it, late last year, or rather late summer last year, DeepMind published a paper which expresses a lot of what we've been saying for a while very clearly. It was called Neural Algorithmic Reasoning. And basically what it describes is that deep learning does not take advantage of any existing algorithms that are known to computer scientists. And that is one of the big advantages that we have. We actually have a solution to that problem. And that's what I'm going to go through today. But to put it with an analogy, it's like asking a human to try to solve a complex problem and saying you can only match patterns. They'd look at you like you're crazy for good reason. And it's not surprising that neural networks are the first type of what we call intelligence architectures, first intelligence architecture to exist. It's similar to why the Wright brothers created a plane that looks like a bird. It's because what we know, but it doesn't mean that it's the only answer. Our solution is actually based on a completely different approach called genetic programming. Some people may know about that a little bit, and if not, the simple way to think about it is if neural networks are the digital equivalent of the brain, genetic programming is the digital equivalent of evolution itself. And it's actually been around for about 70 years and was initially proposed by Alan Turing when he created the Turing test and thought that if there is a solution out there that will pass it, it's probably something like genetic programming that will get us there. But for those 70 years, there have been a series of intractable problems technologically that have prevented it from becoming widespread. It really is not suited for complex real world problems in the form that it has existed before. We had previously in the last few years maintained our solutions to those problems as trade secrets, but given that the environment changed, starting kind of with that DeepMind paper last year, now there's thousands of smart people thinking about this type of gap. We actually have a patent application that's going to be submitted within the next week. The final draft is under review right now. And so just in the interest of time, I'm gonna, I'm gonna stick on this for just a few seconds because I want to talk, well, never mind. I take that back. I'm gonna keep going. Let's talk about proof points and traction. We've been around for a couple of years, though the technology was developed long before that as a garage project that we had initially commercialized or monetized by starting a hedge fund and using Perciever AI to help us determine what trades to execute. That is going very well. And since we got that to a reasonable point about a year and a half ago, almost 2 years ago now, we started Perciever AI as the software business to more broadly commercialize Perciever and have broader impact. So 2 executed contracts so far. We are working with one of the top 3 telecom companies in the United States. I can't say their name, but we are working on reducing energy consumption of their base stations. They spend about $1 billion on power per year. And the second one is in the aviation space, where we have entered into an exclusive partnership with a UK-based software provider called MyAirOps to help with optimizing initially fuel burn and CO2 emissions. And after that, things like preventative maintenance and crew scheduling. There's some other highlights here. I won't go into the details. As I mentioned, the patent is going to be submitted imminently. But the other things here talk about some other POCs and projected annual savings from those. The market size, I know if you see something crazy like this, 2 trillion, you may not believe it. If I send the deck out later to anybody that's interested, there's a link here that brings you to a very detailed analysis of the market across many different verticals. Our strategy right now is to start with 3 verticals and expand from there to ensure that we have proper focus. I'll skip this. Business model, how does it work? Depending on the type of client, it's either a revenue sharing or an annual renewing subscription deal. And we also offer professional services to assist when people want more help than just the initial onboarding such that they can use the product themselves. Competition, obviously existing neural network-based technologies like TensorFlow and Watson, data science teams working with various analytical tools and bespoke custom solutions for particularly optimization, which is a big sweet spot for Perceiver. Competitive advantages here. Output is immediately inspectable, so no black boxes here. It's a program that writes other programs, so you get code at the end of it. Completely visible to everybody about what the thought process is. You can use all existing human knowledge and proprietary knowledge as a starting point. And let's see, there's no bias whatsoever other than within the data that you provided, because it does not require a human to predetermine how to train a model. Just to quickly keep going, 3 co-founders, myself, Milton, and Jose. We all have over 20, Jose, we all have 15, 25 years of experience at many very notable companies. As you can see here, Milton, who was the primary brains behind the original product, spent the last several years before coming over full-time with us. We're all full-time on this, leading one of the top PhD AI teams at Google. We have a very world-class advisory board. Not going to go into the details, but they span industries and specialties. And we have some other things that people can look at later, but essentially a roadmap from this year, next year, and what it'll take to become a $1 billion company with some financial projections. The investment opportunity now, we have a $4 million safe open. We've funded $750,000 of that, $30 million cap, 20% discount, some use of funds for later looking, and I will stop now to take questions.
Thanks so much, Howie. Let's head over to the judges. Juan, could you kick us off? Sure.
Thanks so much, Howie. Very interesting pitch. I guess I'm curious about 2 things. One, actually, I think you just answered, or at least the team slide sort of answered for me. I was curious about what hedge fund you worked for and how the performance was by Bridgewater Associates. I know it was good.
Yes, I worked there for a long time, and we actually started our own a few years ago. Okay. And that's the one using Perceiver as the basis for it, just to build a track record before exploring any external partnerships, which is coming later this year.
Excellent. And how was the performance for the hedge fund that you guys started?
So what I can state publicly, which was there, is that in the initial 2-year test, it generated a little bit north of 200% returns, which is about 100% annualized. It actually performs a bit better than that, but I can't publicly disclose those details at this time, unfortunately. Yeah, we do have a technical deck that goes through the example of that 2-year test, with specifics of how Perceiver was used for it and the exact results.
Thank you. I'd love to learn more about that as well. Just have a hedge fund background as well, so
cool.
Very curious.
Very nice.
I guess the last thing, real quick, go-to-market plan. So it looks like this is going to be an enterprise sale for the most part.
Yes.
How do you plan on reaching the enterprises that would use the platform?
Well, so what we've been doing for the past year, honestly, I mean, as you probably well know, right, like these sales cycles are long and it's all about networking. So I'm fortunate to have, between myself, my co-founders, and our amazing advisory board, we have a pretty deep and extensive network across startups, enterprises, and so on. So the most successful avenue has been just networking, and we tend to be able to get conversations with fairly senior people when they understand what we're talking about. That's one of the things we had struggled with originally, was getting the messaging correct, because you have a wide spectrum of people understanding what we're talking about, and it's not a very concrete product in one sense because it's so generally applicable to everything. We really had to hone in on the messaging. And so really that's the answer. It's really about networking. And once we get the conversations going, the sales cycles have tended to be between 3 and 9 months, which is not unusual for B2B enterprise. And in addition to the ones that we've already closed contracts on that I mentioned, we have some other really interesting things in the pipeline. One, for example, we're giving a presentation next month to the Princeton Plasma Physics Lab because they're very optimistic we can help with accelerating fusion R&D, especially on the heels of the study that just came out recently. I'm not sure if you saw with the Swiss Plasma Center, where they use neural networks to help optimize plasma containment. And we know for a fact that across many domains, we outperform for optimization problems, especially dramatically relative to neural networks solving those problems.
Thank you.
Thank you for the
Thanks,
question.
Juan. Amar, any questions from you?
Yeah, at one point you've mentioned genetic algorithm is not new. It's been around for a while. One of the main reasons people pick up or are more comfortable programming neural network because it has more flexibility. So the data as an input and an output. Is there any limitation for where this as an application apply per sector? Is there any better performance in sector A versus sector B? As a data input, is there also a limitation of the input of data that could hurdle your expansion for other sectors? I know you said you were focused on the 3 sectors for now.
Yeah, the initial, I'll kind of go backwards on that if I can for a moment. Like, so yeah, so we are really focused on transportation, logistics, financial services, and energy right now. But we're also exploring biotech, healthcare, and some others for future expansion. But the short answer is not that we've found, and we've also done extensive red team testing. Every time we solve a new type of problem, we will do the problem also in TensorFlow with best efforts and compare. The impediment that you were mentioning related to flexibility for genetic programming, of which is a superset on top of genetic algorithms, because genetic algorithms evolve coefficients. Genetic programming evolves programs themselves. And one of the or a couple of the problems that we've solved that had previously been intractable were exactly related to that, like the problem of navigating large solution spaces and so on. So those are not an issue as far as we have been able to determine over the years with Perceiver. But you know, maybe there's something we will still learn in the future. To be very honest, we actually have even created neural networks with Perceiver by putting neural network building blocks into the genome, which is the set of building blocks you start with. And so our hypothesis, which is not proven yet, but it's on the list for eventually to try to mathematically prove this, is I believe, and we believe, that there's an infinite number of intelligence architectures. Like if you look at an intelligence that's in another galaxy or another universe, if you believe in the multiverse, for example, it's going to look radically different from ours, and we may not be able to comprehend it, but it's not better or worse, we think it's just different. And so Perceiver, using an evolutionary process, can create any arbitrary intelligence architecture, whatever is best suited for the problem at hand.
Fair. That's a great answer. Thank you.
Thank you for the question. It's a great question. And I actually have a paper also that I can provide, which lists a number of academic papers articulating the details of those previously intractable problems with a little blurb about how we solve it. And once the application is submitted, then that will be able to be disclosed with all the details.
Yeah, I mean, patents could only go so far with software based, as you know, and yes. I don't know if you've heard about Dale Morgan. He's one of the professors out of MIT, did my PhD with him, and he did a lot of work in this space. So we could pick this conversation offline.
Oh, that would be great. Yeah, and definitely it only goes so far, but you know, the decision to move from trade secrets to a patent is because there's just an increased interest in now solving the ability to use algorithms with AI, which is basically what this is. And so we want to make sure we get the filing date before anybody comes out with something that might be competitive in a year or two.
Yep.
Thank you, judges. Thank you so much. And thanks, Howie. We unfortunately are coming up on time. So Sanjay, I'll kick off with you in the next and final company.
Great. Thank you, everybody.
Good evening, I think it is for everybody now. Can you all see my screen?
We can see your screen, Tom, but there we go. Perfect.
All right, and can you hear me speaking as well?
We can, yes.
Oh, beautiful. Okay. Good evening, everybody. I'm really enjoying the presentations, and Howie's answer to that last question was awesome, actually. Tom Rump, CEO, Measure.io. Let me just jump right in. So we are using AutoML and AI for discovering, analyzing, and predicting for issues that impact our ability to feed all people. So it's agriculture and supply chain. Quick background, Techstars Austin 2018. We have an enterprise B2B SaaS go-to-market strategy, which we've augmented with AutoML and AI, and most recently added open source intelligence with natural language processing. And you can see the traction to the right, the customers we're working with, Bayer, Cotton Incorporated, BASF Customs, and most recently Syngenta, and a quick snapshot of our revenue progression from 2018 through 2021. So the 4 customer sets that or segments that we're approaching are the Earthstream fields, so think agriculture, Earthstream monitoring, think biological threats, Earthstream research, think research for crop protection companies, and an open food trust, which brings it all together, doing track and trace for food in the supply chain. And again, a recap of the key customers and partners. How we do it is we register a location or a topic. It could be a longitude, latitude. It could be an airborne pathogen negatively affecting cotton. We assemble all available information, literally worldwide. We augment that with user data. We build progressive models using that data. We make predictions as to what has happened. We validate what has happened, what's happening in real time. It's a geospatial time series platform. We make predictions as to what you can expect to happen, and then we verify and learn. And as we all do, we do it all over again. The key thing, and a lot of people were talking about this earlier about data and analytics and spreadsheets. What our customer set has said, you guys are great about the data and analytics. Tell me the 3 things I need to know in the morning before I get into my truck. And when I'm able to look at my mobile phone and I can see that here is the weather, here's your irrigation recommendations, and oh, by the way, here are the risks that you should be expecting in the next 24, 72 hours. Where our data comes from is to the right-hand side, typical data sources. Some are for free, open source, some are for fee. And then we also augment that with satellites, drones, sensors, climate data, and then disease and risk models. So that's how we pull it all together. Our future and the growth of what we're working on is predicated on this platform. We call it the Open Food Trust. So we're doing track and trace with linked data and verifiable credentials from farm through to processor, first receiver, shipping, retail, and then to customs. So we are able to, as the sources on the left tell you what's happening, and then we bring that all together, and we're using open APIs, open source APIs, in order to deliver that information to either the trades, so think in this case Walmart, or to US Customs, who is doing customs holds and analysis. So the key important thing for all of us on this slide is that, for example, we can tell you where your food has come from and was it grown appropriately with the effective use of fertilizers and not ineffective use of pesticides. So with Walmart, we're tracking avocados from South America through to retail. The other thing we're doing, which is a recent development on the cotton side, is there are places in the world where there is believed or allegedly cotton's being grown with forced labor. What we're able to do is to track from a location in Asia through to the ports, through to shipping, all the way into the producer that would be creating your shirt or your shoes. For the technologists, this is the architecture data flows. All of our APIs, we're creating standards with W3C so that our end users can have access to the data, and that it can come into our system, go back out of our system rather seamlessly. The team, myself, background, tech-enabled services, Mike Perox, the founder, CTO, data scientist, environmental scientist, and he has a small farm, which is where this original idea came from. And then Cam Lewis, who grew up on a 3,400-acre family farm and is the person who we go to say, this is an interesting subject. What do you think a typical farmer would or wouldn't be interested in? And she's awesome at that. So again, the key thing we're doing is providing track and trace from farm to retail for agriculture food products with an overlay of disease and risk pressure. Thank you.
Thanks so much, Tom. Let's head over to our judges, and as promised, let's kick it off with Sanjay.
Thank you, Tom. Great presentation. Great area to be in. First time I'm hearing track and trace without the mention of blockchain. Is that something you have incorporated already? And my second...
Yes. I'm sorry. I always like to say track and trace verifiable credentials on blockchain, but for me that sounds like buzzword bingo. Mm-hmm. So all the work we're doing is based on blockchain technology. Okay.
I maybe failed to catch that. The second is
and the tricky part is with Walmart and Amazon, QLDB versus other options, because Walmart will not work with an Amazon product.
Okay. And then you mentioned something with AutoML. I'm just curious because it seems like there's a lot of supply chain being tracked here, and there was mention of AutoML as well. So exactly where is AutoML being applied?
We bring in all the data. So we're bringing in satellite data. We're bringing in social media data. We're bringing in our proprietary algorithms and then transactional data. When we identify a location, what we're able to do is basically hit go, and the auto machine learning creates and builds the models on their own so that we're able to understand what the connections are without having a Palantir-like approach, which is 70% platform or 30% platform, 70% services. Ours is more so 90% platform, 10% UI.
All right, thank you.
Thanks, Sanjay. Amar, any questions on your side?
Yeah, Tom, great presentation. One slide you showed the customers and partners all together. Do you mind touching base on who's actually paying customer and who's a partner? And if they use customers, are they coming as a paying customer or is they coming as a partner for one of the solution?
Effectively, the paying customers would be Bayer, BASF, Syngenta, Cotton Incorporated, and also U.S. Customs through the Silicon Valley Innovation Program, if you're familiar with that, Alyssa O. So we're on a track and trace program for supply chain with Customs Border Protection. And we're also involved with DHS Biothreats through Silicon Valley Innovation Program. Those are OTAs, paid contracts. So in this particular...
You go ahead.
The only one I would say is really a partner is Walmart because they're involved in the project, but we do not have a commercial arrangement with them.
And it seems like you have multiple products, if I could use that term, or services for depending on what you're doing. Is there any plan to expand on that, just utilizing the big data or access to different data in different corners, expanding the service and products long term? What do you envision the growth from products and services?
So a couple of examples, what we've tried to do, because we are all entrepreneurs in this crowd, is to stay focused. Because we get people say, hey, Tom, why don't you tackle Napa Valley wine? You have great product for that. And I say, nobody would rather do that than me, but that's not where we're focused. So we're focused on the track and trace for the supply chain. We're focused on agriculture through crop protection. We're not going to individual farms because you lose your mind trying to do that. Where we see some interesting aspects is it came up today with hedge funds, because, for example, if you all are tracking the Ukraine for a variety of reasons, a big issue is going to surface, which is fertilizer, which they are a big producer of nitrate. So we have the wherewithal to understand what the impacts are there and how that will affect worldwide, example, wheat production. So we're getting a little bit of interest from the commodity markets to say, if you have all this information, and of course their angle is, if you tell me and I know before everybody else, I have a little bit of an advantage, so I can trade on that. So that would be an example. We've stayed away from oil and gas, but one of the areas we think will be really important is carbon capture, carbon sequestration, because it happens on the farm. And if we can help people with that in their sustainability initiatives, we think that's a logical extension.
Thanks so
And
much.
supply chain, as you know, is very topical these days across the board.
Thanks so much, Tom. We are unfortunately up on time, so we're going to go ahead and start the judging deliberation. But thank you so much for the great presentation.
Well, thank you.
And so with that, we've heard from all of our founders, and now our judges are going to go off to deliberate. So I want to thank our founders again for joining us today. I know I speak for our whole team at OneValley when we say we really look forward to seeing what the future holds for all of you. So give us a few moments to tally the scores and do some deliberations, and we'll be right back.
We help people build things never built before, and we help them do it with secure, scalable Oracle Cloud. This program builds partnerships that work for everyone by connecting Oracle customers to exciting startup technology and startups to amazing opportunities like free and deeply discounted cloud, exposure to new audiences, and hands-on support from our technical team, mentors, and experts. Here's what some of our members have to say about their experience in the program.
It's been positive, more positive than maybe you think. We've been through a couple different programs from AWS and Google, and I think one thing that I find with Oracle, it's a community. You get a little bit more of a community sense with the whole Oracle for Startups, not only from other startups, but the entire Oracle community, and that's been really supportive and helpful for us.
Since we joined this program, I remember the first day I met someone in Oracle who actually helped us kind of join this journey, and on the back of that, we've made so much connections, we've learned so much. And so being able to just connect with people, ask if you have any questions. And so it's one of those things that it's been such a delight, and every part of our team has gained something on the back of that.
We help people build things never built before, and we help them do it with Oracle. Join them at oracle.com/startup.
All right, we have our winners. I know everybody is waiting with bated breath, so without further ado, I'm just going to get right into it. So the winner of tonight's audience participation prize, which is an annual passport membership, goes to Andre, co-CEO of Big Knowledge. So Andre, we will be following up shortly after the event to make sure that you can lock in that annual passport membership. And as a quick reminder to the audience, if you yourself do not already have a passport account, those watching tonight can use the code on your screen to get 25% off an annual passport membership. So for our winners, our People's Choice Award, as voted by the awesome audience, and the winner of our $1,000 cash prize goes to Measure.io. So huge congratulations to Tom and the rest of the Measure.io team. And finally, our grand prize winner, who will be walking away with $7,000 in cash and $10,000 in Oracle Cloud credits, is, drumroll, Howie of Perciever AI. So huge congratulations to the entire Perciever AI team, and Howie, congratulations on a great presentation. So I would like to thank everyone for joining. Thank you to our amazing audience, and reminding you guys that you can connect with any of our startups that were featured today via the Meet the Startups tab at the bottom of the page. A quick thank you again to our judges and to our speakers, Jason, Germain, Amar, Thomas, Sanjay, Juan, everyone. Before we end, I want to share a bit about OneValley. So if you weren't here for the intro, we are a global innovation platform. Check out Passport, use the code provided today for 25% off your membership. And so on behalf of myself and OneValley, thank you all so much for joining us. And thank you again to all of our founders and to our sponsors. We can't wait to have you back again soon. Take care, everyone.